I think the thesis of the shorts is if the premium in the equity disappears, we can't make money.
Hey everyone, hope you guys are all having a good day here. We got some crazy news coming out of New York. Hedge funds have started to short MicroStrategy, and I want you guys to listen to Michael Saylor's response.
Bitcoin's been on a wild run, and boy, have you been right. But I'd love for you to respond to this report.
Yeah, well, I think a lot of people don't understand our core business. We're a Bitcoin treasury company. We're powered by a Bitcoin reactor. We've got $35 billion of Bitcoin, and it's spinning at 100 vol. So the way we make money is we're selling the volatility and recycling it back into Bitcoin. And we're also stripping the volatility and the risk and the performance off of fixed income securities. And we're transferring that to the common stock. So our common stock is delivering 2x Bitcoin, 2x vol.
So just from that, you guys have learned a few important things. Of course, MicroStrategy, very high volatility. We already know this because it's following Bitcoin. But on top of that, it's 2x volatility. If you're going to short something like Bitcoin, you're going to have to time the market appropriately. And right now, Bitcoin's on the verge of a massive breakout, or you guys could say maybe a large level of resistance. But the way we've been going after the Trump win here, it's been sky's the limit. And we've also seen something else coming out of this. A lot more hedge funds are trying to take very risky bets in order to make a lot of money very quickly. I think because so many things are blowing up, they're being left behind. And if your hedge fund is only making back 10 to 15% a year and you see Bitcoin going up hundreds of percent, of course you feel like, oh, if I would have just bought some Bitcoin, I'm fine.
So Andrew, if you want to understand the economics of this, we generate a spread. The BTC spread we generate, it's a function of the equity premium, the convert premium, and the Bitcoin premium. The Bitcoin premium is the ARR of Bitcoin versus the US dollar. 2 weeks ago, we did 4.6 billion of an ATM. We ran it at a 70% spread. That means we made about a $3 billion BTC gain in 5 days. That would be about $12.50 a share. But over 10 years, that's $36 billion, or about $150 a share, just on that 1 week. This week we did a convertible bond, $3 billion at an 80% BTC spread. That's a $2.4 billion gain. That's about $10 a share, but over 10 years, that's $125 a share to the shareholders.
Now, this is one spot I'm in a different mind than Michael Saylor here. I don't actually think the short sellers are expecting Bitcoin to go to zero or anything like that, especially with Trump coming into office and all the crypto czar stuff. But I do think that they are thinking right now that Bitcoin is hitting $100,000 and we're topping out there. And then from here, it's only going to go down. That's what I think the short sellers are expecting, because if Bitcoin goes down, you guys know MicroStrategy will probably lose about 70% of its value, which will be crazy, but they'll be able to make a lot of money from that. However, the technical analysis does not lend itself to that, so it's a very risky bet, which again begs the question of why do they feel the need to really want to short this sucker when so many people over the last few weeks have been so burned by doing so. And again, this makes me think this is only going to be a short or medium term short position, because I cannot see how anybody at this point wants to do a long-term bet against MicroStrategy or against Bitcoin. It just would be a massively stupid decision at this point.
I think the thesis of the shorts is if the premium in the equity disappears, we can't make money. What they miss is that when we actually borrow money at 6% and we invest it in Bitcoin, and Bitcoin goes up 30%, and by the way, Bitcoin's going up 60%, we're getting a 90% BTC spread, but it would be 80% BTC spread, which means the $3 billion fixed income raise in preferreds or bonds generates the same $125 a share and $30 billion over 10 years. So once you understand that, you have a different view of the company.
So what do you say, though, to those who say there's a risk here? Because this is effectively a levered Bitcoin position. And if, in fact, Bitcoin goes down, this becomes a much more complicated situation.
Yeah, well, the number one risk you take is the existential risk that Bitcoin has an extinction level event and goes to zero immediately tomorrow. But every long investor in MicroStrategy is a Bitcoin maximalist or a Bitcoin believer. They've accepted that risk. Once you accept that risk, what do we expect? We expect it's going to go up 29% a year for the next 21 years. It's been going up 60% a year.
Now, to be fair to Citron Research, I want to read what they posted here so you guys have an idea of what they're thinking about. They say this. How did this one age? Nearly 4 years ago to the date, Citron was the first to tell readers that MicroStrategy was the ultimate way to invest in Bitcoin, setting a $700 price target. Fantastic price target. Fast forward to today, MSTR has skyrocketed to over $5,000 adjusted. Kudos to Michael Saylor for his visionary Bitcoin strategy. Now, with Bitcoin investing easier than ever, ETF's coin hood, MSTR's volume has completely detached from Bitcoin fundamentals. While Citron remains bullish on Bitcoin, we've hedged with a short of MSTR position. So they still believe in Bitcoin. They're just not sold specifically on MicroStrategy. And what we saw happen after this news was we saw MicroStrategy come down about 15 to 20%. And it wasn't just Citron that actually caused this. When they opened up their short and they told everybody they were opening up a short, you saw a lot of other people pile in there with massive short positions. So here's my thought. If you guys like MicroStrategy, I think you guys have a great opportunity coming up if Bitcoin manages to break above $100,000. With all these new shorts in here, it's giving an amazing opportunity for a historic short squeeze on MicroStrategy. Typically, when Bitcoin goes up, MicroStrategy goes up, and we're very happy with those moves because they're already very volatile as is. But when you have a massive short squeeze on top of all that, you could see MicroStrategy going berserk or just as crazy as Bitcoin is, really. And so that's what I wanted to focus on today. What I'm probably going to do is buy some MicroStrategy whenever Bitcoin breaks it above $100,000, and I'm just going to be there to watch it kind of have a massive pop. It'll be a 2 to 3 day hold after the breakout of $100,000, and then from there we'll see. Some of the comments of what people have been saying is pretty mixed, right? Dylan says, we got another one, fellas, which means, they're going to try to do a short squeeze against this guy. How did we miss this? Basically talking about how some businesses are barely profitable, stuff like that. Even though your post is respectful, I think you will get smoked on that one. There's a saying, don't try to catch a falling knife. I think there should be a similar saying for the inverse, don't try to hold a rising rocket. MSTR multiples are still good considering other NASDAQ and NYSE companies, even though the premium on Bitcoin held is scary, right? So again, they hold a lot of Bitcoin. That is going to make things a little bit more volatile. But if Bitcoin keeps on going up the way it has been, that hedge is going to lose them a lot more money than a hedge typically would, of course, because again, these hedges, no matter what the asset, if it's something surrounding Bitcoin, the volatility is just going to be so much more extreme. So let me know what you guys think about this one. It is definitely going to be a little bit more of a nuanced discussion, I would expect. But do you guys recommend shorting MicroStrategy, or are you guys going to long, or are you guys staying out of MicroStrategy altogether because it is a very volatile beast?